Good morning, everybody. This is Trip, All Things Be Considered, where we discuss anything and everything as the stock market appears that it doesn't know what to do with itself. For that matter, consumers today in America don't seem to know what to do with themselves, and even the Fed is putting out mixed signals as to whether it's going to soon pivot or simply dampen the severity of the rate hikes by a few basis points. Shall we get into it? But first, if you like videos like these and you would like to see more, I ask that you like, comment, and subscribe my videos. It helps tremendously, especially when you're getting a new channel going. It is incredibly hard on YouTube these days to get viewer engagement into a new channel, and all engagement does help in the largest or smallest way. So, much appreciated. Let's get into it. CNBC stocks fall on hotter than anticipated November jobs report, and the Dow slides more than 100 points. And if you took a look at the market yesterday was a very bad day for the market, a very bad day indeed. I haven't yet checked to see how the last few days have impacted my own positions, but I can anticipate that it hasn't been all that helpful. Now, a couple of days ago, we did see some positive activity in the market on the signaling that the Fed was going to perhaps reverse course. I mean, it was interpreted by investors as a signal that the Fed was going to perhaps reverse course, but the Fed has not given us any solid indication that they're going to pivot anytime soon. We're just seeing an indication that the rate hikes are going to dampen a bit. That's not exactly reversing course. It is still going to have a constricting effect on the economy. The frightening tightening continues to rage on, even if it's not quite at the level that we thought it was going to be at this moment. The frightening tightening is raging on, and it is evident everywhere you look, especially if you pay attention to the real estate market. I have, in my view, from my home, the view of new developments that about a half a mile away, they were skyrocketing in pace right around the time that the war in Ukraine began. These homes were skyrocketing. The construction speed was they were building these homes like enormous, like incredibly fast. All this started in my area. I can't speak for other cities, but in my area, a lot of this started in 2020 at the height of the pandemic, because at the height of the pandemic, people were relocating like never before. And it's the remote work, right? You get the remote work, you get all these people taken out of the office, you get them on remote work. They're going to assume that this is going to be an indefinite trend. People moved, people bought new houses. It overheated the real estate economy. And you know the rest of the story. And in mid-2020, these homes were selling about as fast as they could be built. Now I go take a walk out there, and there is an influx of new homes that are sitting there available, and the construction is just crawling along at a tortoise pace. It's the raised interest rates. It is constricting the real estate market. We're seeing evidence of it. The layoffs are attributable to the raised interest rates, and we're seeing a constricting of the economy. But the jobs report indicates to investors in the stock market that the constriction has not gone far enough and that the labor market is still hot. Stocks slid Friday as investors digested hotter than anticipated jobs data, which worried investors looking for signals that the Federal Reserve can begin slowing interest rate hikes. The Dow Jones Industrial Average dropped 160 points, or 0.5%. The S&P 500 lost 0.7%, while the Nasdaq Composite shed 0.9%. And I was noticing a couple of days ago that the Nasdaq was doing a little better than the other two. The S&P 500 and the Nasdaq are on track for modest weekly gains, while the Dow is on pace for a similarly minor loss. Non-farm payrolls increased 263% in November, a bigger gain than the $200,000 increase expected by economists polled by Dow Jones. The unemployment rate held steady at 3.7%. Average hourly earnings also came in above expectations, jumping 0.6% compared with the prior month and 5.1% against the same month a year ago. Treasury yields, this is the interesting part. Treasury yields, well, stocks slid as investors digested the data, which was closely watched, with labor considered a relatively stubborn area of the economy. When you think about the philosophical, existential side of the whole thing, it's a little bit sus if you look at it a certain way. I mean, we have the Federal Reserve and we have the economic experts, the Ivy League educated experts, talking about how it's going to be that the tightening is going to have to continue onward, and it's going to have to become more painful because the American economy is tenacious, and the American consumer, even with reduced purchase power, is tenacious and is still going to buy things, and they're not going to give up their coffee and their Netflix. And it is sus as hell when you look at it in an intuitive type of way, because it's almost as if to say that they have to destroy the economy to save it. You fight inflation at all costs, you constrict everything, you unleash upon all of us the effects of the raised interest rates and the layoffs that are going to ensue from that, and the raised costs of doing business among the corporations, and how they, of course, are going to pass that off to consumers and workers, and the ripple effects it's going to have. And all this to fight inflation that was caused in the first place by, an oversupply of money relative to the supply chain, a breakdown in the supply chain, and the rampant corporate to consumer abuse that we have seen since the pandemic began. Sus as hell, isn't it? Sus as hell. Now that, have you been keeping up with Blackstone? Because it appears that Blackstone might be in danger of becoming the new FTX in the world of alternative tangible assets. Now, this came as a huge shock to me when I heard the news about this last night, that Blackstone is processing, that they're actually servicing a very small percentage of their redemptions. They did so in November, and they announced yesterday in a notice to their clients that they are going to be processing a much smaller percentage of redemptions in going forward, at least for the foreseeable future. So the Motown fan in me is saying, what's going on? The Marvin Gaye song, I can't sing, so that's the best I can do. But this is very, very concerning. The liquidity. Where is the liquidity in this, and why isn't it there? And I realize we're very early into this situation and we don't have too much information. We know that most of the withdrawal requests are coming from Asian investors. To what extent might this have to do with the political instability in China, and how that might be affecting the markets in Asia? And make no mistake, what's going on in China is going to have profound implications for the Western world and the world at large if the instability goes on. We're seeing now, we spent all these years as a whole, American society, in great comfort owing to cheap labor in China and elsewhere in Asia, and the manufacturing of an enormous amount of consumer goods in the years leading up to the pandemic, and we are seeing indications that the era of easy, cheap labor and a supply chain that works so well that it can be taken for granted, we are seeing indications that the age of both may be coming to an end. And you look at the upheavals in one of the most important smartphone manufacturing plants in China, owned by Apple. You're seeing that workers don't want to live under these conditions anymore. But more importantly, workers are not willing to tolerate these types of conditions anymore. And you're seeing upheaval caused by that and caused by the growing intolerance to the zero COVID policies. And given the fact that China is a manufacturing powerhouse, the biggest manufacturer in the world, it is absolutely astonishing and horrifying to imagine how that is going to affect, especially the Western world, especially the United States, which consumes the world's resources, but not so much produces in the way it once did. Back to the Blackstone news. I wanted to mention that Blackstone has done, for its own investors, it has produced fantastic returns. Pretty reliable, great returns, especially with the Bright Fund, which BREIT, a real estate trust that reportedly allows investors who may not necessarily be ultra high net worth individuals to take part in this tangible asset alternative investment real estate market. But there's obviously trouble in paradise, as Blackstone they're selling their 49% stake in the MGM Grand in Las Vegas because they've got to produce that liquidity. And I'm sure they fear, I imagine, becoming the next FTX, the FTX of the tangible asset market. Now, if this has been good for the investors up to this point, do you think that this real estate situation was put about ethically? What was it put about ethically? Well, the UN doesn't seem to think so, because in 2019, the UN all but accused Blackstone of, quote, contributing to the global housing crisis, buying up properties, especially single-family homes, apartment buildings in cities all over the world, and raising the rents to exorbitant rates to levels that existing tenants could not afford. World's largest corporate residential landlords called out for their practices of inflating rents and aggressive evictions. And look at Stephen Schwarzman, the CEO of Blackstone, with his smug attitude. Just awfully smug attitude. Does not appear to have any empathy for the losers in this global real estate transition. They've produced some very lucky winners and a lot of very unlucky losers, and this guy, one of the winners, just doesn't appear to have any empathy for those who have been who have been crunched by the real estate situation. So a couple of paragraphs of that. In a stinging critique of the role of private equity in the housing market, UN rapporteur Leilani Farah and co-author Surya Deva, chairperson of the UN Working Group, singled out Blackstone's business practices, which they claim include massively inflating rents and imposing an array of heavy fees and charges for ordinary repairs, as having devastating consequences for many tenants in countries around the world. In a series of letters to Blackstone and government officials in the Czech Republic, Denmark, Ireland, Spain, Sweden, and the US, Farah and Deva accused the private equity private equity and asset management firms like Blackstone and its subsidiaries as of undertaking aggressive evictions to protect its rental income streams, shrinking the pool of affordable housing in some areas, and effectively pushing low and middle income tenants from their home. Free market capitalism is producing a destruction of the lower and middle classes worldwide. You know this is an incredible problem when you have countries like Denmark and Sweden affected by the whims of free market capitalism. Two social democratic countries that have for decades enjoyed a high standard of living across a broad range of the population. And they are not immune to the whims of the corporatization of real estate and the corporatization of landlords. And of course, Blackstone they thoroughly denied that any unfair management of these properties and any unfair rent increases actually took place. But it was alleged, and let me find that paragraph for you. Now, it was alleged that at one point, late payments, even if they were 1 minute late, were that tenants were charged for late payments, as much as $100. I don't believe that the corporatization of the real estate market worldwide can possibly be good for anybody who is not a top investor or a top administrator in firms like Blackstone. It's just, it will not benefit about, I would say more than 98% of the world population are worse off for the corporatization of real estate. And we saw earlier this year, when news reports, we saw earlier this year of the impact corporate-run receivership has on low-income residential areas. We saw the stories break from Vice and other outlets about trailer parks becoming less and less of an option for the lowest income renters. You know, it wasn't that long ago that trailer parks were considered one of the last bastions of the working poor. They're not nice places to live, but they're a place where the working poor can rent and perhaps own. And we're seeing that under tremendous threat by, again, the corporatization of real estate, because these investors are buying up these trailer parks, they're raising the rents, they're pushing the existing low-income residents out, and thereby replacing them, I suppose, with maybe lower middle class retirees who can pay the rent. Alternatively, low-income renters are just having to absorb these raised costs because, what was that fellow's name? Rolf, who's heavily into this industry, heavily invested into this industry, said that poor renters have a high rent tolerance, and they cut their expenses elsewhere, and they absorb these higher rents. It's manifestly unfair. It's insanely unethical. And it's going to have ripple effects that are eventually going to bring down society a notch and affect everybody. Crime will increase, property damage will increase, homelessness will increase. These are problems that all of society have to confront as a whole, or they will only get worse. And that is why we need broad social safety net, and we need regulation that comes in and taxes the very richest of the citizens, not so that you take the incentive away to make money, but that you make it to where the least fortunate among us are not trapped in a cycle of poverty and perhaps risk of bad behavior, of crime. And so closing out, you look at most viewed from The Guardian. I'm not going to read these, just invite you to take a look at them. China brings in emergency level censorship over zero COVID protests. The policies in China make no sense They have alienated their citizenry. They have decimated their manufacturing, and it looks like they are going to decimate their image in the world. It makes zero sense that they have pushed the zero COVID this far. What is the purpose of that? What for? I would love to hear a comment on this. Kanye West suspended from Twitter after posting swastika inside Star of David. Disgusting. Absolutely disgusting. I miss when this guy was a respectable artist, and I loved his music in the late 2000s. Well, that is that for now. Thank you for listening in. This is Trip, All Things Be Considered. If you like this video and others like it, I have an upcoming video about how Mercedes is turning into their cars into rolling Netflix outlets. You don't want to miss that one. So if you like the video, like, comment, and subscribe. Thank you for watching. See you next time.